YouTube.
And the other one.
And another one.
And the other one. And the other one.
Merry
The
Christmas.
other one. And, no, that's the wrong show. Dude.
Happy New Year.
That's the wrong show too.
Shoot.
Happy
Rates are not coming down.
We got a lot of shit going on, man. You got a lot of shit going on. You got to refresh everything, or else it's not gonna be old. Or it's gonna be old.
Hey guys, how you doing? You remember the drill? Here for real estate. Here for loans. Here for aliens.
Oh, we got some good stuff, man. The rates. Pull up the rates. Pull up the rates because it's a strange situation that's going on with the rates right now. And there's one coming in today. So there's CPI, and then there's PC. Consumer confidence. Yeah. PCI. Are you, dude? We're on Facebook, Instagram, TikTok, and YouTube. Okay, cool. Hey guys, we appreciate you. We got a whole bunch. Ryan starting out with a $1 million loan. Ryan, you're farther away from that $1 million loan than you were last week. Way further. Why? Well, they interpreted what the Fed said, and there's some panic going on in the markets right now. There's some panic, and I'm watching the loan officers. I watch the loan officers when I get a little bit of time. I watch what the loan officers are saying, and there's a lot of guys who really don't know what they're talking about out there, and they're actually putting it out on TikTok. It's hilarious.
What are they saying? What is the incorrect information?
So, like if I said, "Hey, people are telling you can only drink caffeinated coffee," but I got to tell you something that not a lot of people know. There's uncaffeinated coffee. And you're like, what? There's uncaffeinated coffee. I'll give you the loan version of that. People are going, well, if your bank is telling you that the VA loan requires a FICO score, well, your bank doesn't know what they're talking about and you need to turn to me. And I'm like, no. If you have any intelligence in this industry, you understand, and you read the guideline, the VA guideline doesn't have it. Now you're saying it's an overlay. I get it. That's a different thing. But they're walking around saying like, that's what the banks are saying. I'm like, no. That's what kind of stupid people are saying. It's not what the banks are saying. Anyway, coming back full circle, so there's two things that control our economy. Well, not two things, a lot of things. But part of it is quantitative easing or quantitative tightening. That's the other side of quantitative easing. And the prime, the interest rates. So the Fed has come out recently and said, hey, we're probably not going to do anything in March. That's the upcoming meeting. But the way things are looking, they're not going to do anything in May either. And it's probably going to be June or July. And what they've committed to is saying, hey, we believe there's going to be 3 interest rate reductions. Now, one of the Fed members said as many as 6, but the overall consensus of the Fed notes are 3. So when are those 3 happening? Well, you have to know that there's 10 Fed meetings throughout the year. Not 1 a month, but 10 Fed meetings. Hey, Emily, we appreciate you. I'm glad you're learning something. If you've got questions, let us know. And you should have a mentor and try and learn something every single day. And don't just believe whatever gets dropped on you. Because people drop things on you. I'll give you an example. We just funded a loan about 2 weeks ago. And the underwriter said, hey, that twice removed uncle, was it an uncle? I think it was an uncle, right? Yeah, twice removed uncle is not a relative. And the underwriter shot us down and said, nope, we're not approving this loan. And they said, why? We said, because it's a gift from a relative, and that twice removed uncle isn't a relative. So Chris and I sat there and we're like, what? Let's look at what is the definition of a relative. And we dug in to the guidelines, and the guidelines are very wide open. And we went to what's called in our world the CPM, the credit policy manager, and we said, hey, listen, the guidelines don't say once removed uncle or twice removed uncle. This is an uncle. And the CPI said, yeah, I agree with you. This is an uncle. Overrode the underwriter. And by the way, the underwriters do these things to kind of protect themselves. And if their credit policy manager overrides them, it kind of insures them against problems. So I kind of get it. It's like an overly cautious person, and usually that's when your pull-through ratio is falling apart. By the way, your pull-through ratio means you funded a whole bunch of loans and they came back because they defaulted. That means you as an underwriter are being scrutinized. You have a chums number that has a pull-through ratio that is scrutinized. So if you want to learn a little bit about the loan business, I'll teach you about the loan business. Anyway, we appreciate you guys. We got a pretty big audience on Facebook, TikTok, Instagram, and YouTube. If you got questions, please ask the questions. We're here to help you. By the way, rates are going up. Rates are going up a lot. Go ahead.
You know what that means?
What? It means close. Wow.
So you guys are interested in buying a house and you just want to see where you stand, go up top to the link, click on the stand.store link. We'll tell you exactly where you stand. It doesn't cost you anything. There's no obligation and there's no negative impacts. But you guys do have to reach out, or you can reach us here, take a screenshot, and get the process started.
Give me the rates. What are the rates today? We're going to tell you what the New American Funding rates are today. If you want to know what there are, you can always go to the top link on our profile, and then there's going to be cool stuff. And on cool stuff is today's rates. Today's rates, New American Funding is putting out a 15-year at 5.75. A 30-year at 5.875. I'm sorry, 15-year conventional, and a 30-year FHA at 5.875. The 30-year conventional is 6.25. So, what does that mean? Well, about 10 days ago, that 15-year was at 5.25. Now it's at 5.75. Do you know why? Because the market, once again, has uncertainty in it, and the 10-year yield is escalating. Remember that the mortgage rates are based off of the 10-year yield, not off of what the Fed says. What the Fed said does influence the 10-year yield because it's a market, but there's a spread, and traditionally there's 100 to 150 basis point spread between the 10-year yield and the mortgage rates. But right now, because there's uncertainty, it's getting wider, which means it's harder to buy a house. It's harder to buy a house. And the Fed has that big monetary M1, which is the Fed rate. But the second thing they have is quantitative easing and quantitative tightening. Quantitative easing is when they start pushing money out to the market and they make money easy to get. They're not doing that right now. They're actually doing the reverse. They're pulling it back in, called quantitative tightening. So there's a pause on the interest rate increase, but the tightening is still pretty damn solid every month. Now, when the Fed wants to loosen up a little bit, they won't pull back as much money in, then they'll pause, and then they'll flip to quantitative easing. We believe the flip to quantitative easing is going to happen in 25. We believe the interest rate cuts are going to happen third quarter of 24. We could be wrong, but we believe that's what's going to happen. It's going to be a crazy market.
Andriy Shotikovisk. Hello, how much should we be making in order to afford a $400,000 house?
About $100K, maybe a little less in that range, and it's also going to depend on your tax base. If your tax base is high, very high, just close the loan with a tax base at 2.97. It's very high. I also closed a loan with a tax base of 1.2. That's respectable. I've seen them as low as 8.
7.
8, yeah, 7? Yeah, 7.
Arizona.
Oh, that's
Congratulations,
right.
Arizona.
Yeah, Arizona. I was talking about the one in Arkansas, but Arizona. Yeah, there's a lot of, so it's going to depend, but about $100,000 for you right now.
Dominic, what's the current conventional? We just went over that.
Yeah, convert to 6.25. Dominic, if you're in a perfect world, 6.25.
Emily, I work in refinance. Purchase is too confusing for me. Yeah, it's a little tough. It's a little bit of an uphill learning curve, but you'll get there.
Emily, we appreciate you, by the way. If you're a loan officer watching us, joining us, we're kind of a group in a weird way. We're competitors, no doubt about it, but we're also a group. And we'd like to support you, teach you about the guidelines. And if you know more than us, please check us and put it in there. Let us know. Maybe we'll have you a guest speaker.
Tezo, should you wait if your loan amount will place you in a bad neighborhood?
That's a very good question. You take that.
Oh, okay.
I want to hear your take on it, and I'll hear my take.
So, no, don't wait. Because the bad neighborhood is, I'm not going to say that I would want to move my family there, but here's the truth. You only need to be there for 1 year, okay? So here's how a scenario that I gave about a month ago. And I said, okay, let's pretend that you bought in a bad neighborhood or an area that you just don't want to live in. It's an hour away, okay? And let's just say that you live there for 1 year, and let's just say that you're in an environment where rates are due to come down based on what the Fed has put out. So here's what that means. You buy in a crappy neighborhood for $150,000, okay? You live there for about a year. Let's just say that you're done with it. The neighborhood stinks, the drive stinks, whatever it may be. You sell the house and you cash out equity. Yeah, you do have to pay taxes on that. Yeah, you do have to pay fees. But now you got a chunk of cash that you can start making decisions with, whether that be live in a different neighborhood or maybe even your dream neighborhood. So my opinion is get in where you can. What's yours?
Tezo, that's a very unique situation because if you get to a bad enough neighborhood and you got to protect your family, I don't know that I would do it. So I do get it from a monetary perspective, and what he said is 100% true from a monetary perspective. But then there's from the family perspective of, hey, I'm about to put my wife and young kid into this neighborhood and I got to go off to work. I might pause. And so it depends on what you mean by a bad neighborhood.
Yeah.
If you mean dilapidated, I don't care about dilapidated.
Old.
I don't care about old. I don't care about not the best area.
But
if you mean dangerous, I would stay away from dangerous, and I would save a little bit more money, and it would motivate the shit out of me to go to work and earn more. I would want to earn more to get my family out of that situation so that my family can be safe, because my highest priority is protecting my family.
And
so
the truth
that's
is,
my thought is.
there's only a few neighborhoods in the nation that are that bad. In the nation.
Yeah, I'll give you
so
that.
what that means is if the bad neighborhood's here,
Yeah.
move here. Just move outside of it. So there's not that much going on. Ryan wants to know, what's a house? Okay, we'll get back to you on that.
What's a house? Dude, if you don't know what a house is, we got troubles.
What is that? Is Compton or South Central dangerous? So in the 80s, it was a big deal because LAPD really went hard in trying to clean up the streets and the drugs and stuff. But today, I don't think it's so bad. As a matter of fact, I think we had a shopper in Compton not long ago, and the neighborhoods are gentrified. What is the word?
Gentrified.
Gentrified?
Yeah.
They're gentrified. So they're expensive and the prices are going up.
Explain gentrified.
It's when they have an old neighborhood with the original people that are in there, and then they have a seller, and they sell to, let's say, the 30-somethings coming in. Let's call these 30-somethings hipsters, okay? Now, these hipsters start moving in, and that's changing the community. The whole group of new people are coming in with a different taste of things.
Well, there's corporate gentrification, and then there's natural gentrification. So if you live in an area, I live in an area where there's, it's by a golf course, and there's this whole neighborhood of people that bought when the golf course was just being built, and they just don't move. They're just stuck there. They're stuck there. But 40, 50 years later, they start dying. And as they die, it hits the market. And when they hit the market, somebody younger comes in. And then somebody dies and somebody younger comes in. Somebody younger comes in. Somebody younger comes in. And that's gentrification. It's changing the generations. Gentrification. It's changing the generations through a process. Now, there's another process where they take a, like you were just bringing up, what's the bad area you were talking about?
South Central? Compton?
South Central. Compton, go with Compton. So Compton was very poor for a very long time, but some corporate guy comes in and starts buying up the houses and puts in a very nice mall there. And then they put in some new condos in there. And the person that can afford the condo is not the old person that was in a bad situation before. It's now a more affluent person that steps in. So the more you get that, then the police force gets bigger. The police force starts to clean out the bad stuff, and that's forced gentrification. Forced gentrification versus natural gentrification. That happens all the time, by the way.
Blanca Hernandez, I just tried getting my first home loan with all the info y'all gave me, but they denied me.
Bummer. Bummer. Who denied you?
Yeah.
Who denied you? Is it us who denied you? Because we're not really going to deny you. We're going to give you a path to make it better. We're going to tell you, hey, listen, you don't have enough income for the purchase price that you're trying, so we can either try and increase your income by side hustle, which will actually give you a line into a side hustle, or non-occupant co-borrow, which means we bring mom, dad, sister, cousin, uncle, brother, whoever on the loan, or your significant other goes on the loan, or you house hack, or there's ways to do that. If your credit score is too low, we send you to one of 5 different credit people we deal. There's even one that you don't have to talk to us on. It's on our links. If you go to our links, you can just go there. They'll fix your credit and they'll solve it. So there's a lot of things that we can do.
So here's what a lot of people do. Is they get their deposits at their bank. They deal with their bank. They get the data from the outside, and then they go back to their bank. Okay, that's my experience of people who are getting denied or not approved or whatever you want to call it. So here's the thing: we work for a mortgage company. Okay, so what happens when you go to a bank is you go to the teller, and the teller's like, "Hey, you got $50,000 in your account. You should probably talk to our loan officer. You should probably talk to our investor advisor. You should probably," they try to point you in all these directions because they're trying to capitalize on money. Now, we don't have a line of people standing outside. There's only one thing that we do. Only one thing. We don't do CDs. We don't do savings. We don't do checking. We don't do all that crazy stuff. We only do mortgages.
Don't finance cars or motorcycles. We get asked all the time. We don't do that. Yeah.
We don't even fix the credit. We have experts that we work with that fix the credit. So we're only do one thing, and we're very good at that one thing. So if you guys are interested in getting a home loan, go up top to the link in the platform that you're in at stand.store. Click on Apply Now, or text this phone number right here, and we'll get you on the right path. Tezo, should you wait if your loan amount...
We did that one. Yeah, we did that one already.
Fabian, is there a loan that you can get for incomplete new build? The slab and partial frame is up.
So, Fabian, maybe. There's something called a one-time construction loan, and that is in VA and FHA, but they're very complicated. They're not super simple. Loan officers like I tell you, there's a bunch of bullshit on this TikTok app, and they're all like, "Hey, this is a simple thing to do," and I'm like, "No, it's not a simple thing to do." Just like 203K. Oh yeah, we do 203Ks all the time. No, I've done 203Ks. They're very difficult, and the reason they're difficult is because there's extra layers that they put in there, like a project manager. You have to get approval through certain things. There's only certain people that can do things, and you have to pay a lot of people in order to make this stuff happen. So, can I do a 203K? Yes. Have I done a 203K? Yes. Do I prefer to do a 203K? No. I will if you want it. I will. But it sucks and it's hard. And I'll tell you where all the little hiccups are going to happen. But it's not as simple as people put on TikTok where they say, "Hey, yeah, just easy. Just get a loan." It doesn't work that way. Because traditionally when you build a house, there's something called a construction loan. And there's a general contractor whose business, his only business, is taking a house from raw land to somebody can live in it, meeting all the electrical codes, plumbing codes, roof codes, whatever codes are out there. He meets all of that, gets what's called a certificate of occupancy, and he takes it from raw land to someone can live here. That's a profession. If you're trying to skip that profession, there's a lot of things that can go wrong, a whole lot. This is probably why you got something with a slab. Somebody says, "Hey, I can do this." Boom, ran out of money. See, a general contractor, they get the financing up front and they don't run out of money. That being said, is it possible? The answer is yes, it's possible. Is it easy? Oh, no. It's very difficult. Very difficult. Even the 203Ks are very difficult. So, yes, it's out there. That was a lot, huh?
It's always a lot.
Okay, good.
Jorge, is there a cashback mortgage available in Nevada? These questions, oh my gosh.
No. Would you answer it?
No.
Okay.
Emily, see how you just answer questions? Emily, I talk to a lot of angry people who are getting cash out for renovations but need appraisal repairs. Yep, absolutely. So what I would recommend is when you're doing these refis, ask them what repairs they absolutely need that are going to fail the appraisal, and try to hook up with a contractor that'll get paid through transaction.
Yeah, 203K exists. Emily, what bank do you work for? Tell us about you.
203K. I would just say, "Hey, roofer, we're gonna need a new roof. Can you get paid through escrow? Hey, plumber, we're gonna need new plumbing. Can you get paid through escrow?"
Yeah, you can do that. Explain the difference.
So a 203K is a process. You're going to go through a process where you have to go through a case manager, and they're going to have to approve certain things, and then there's limitations in amounts that you can borrow. But doing a cash-out refinance, just traditional cash-out refinance, what's going to happen is the appraiser is going to go out there, and they're going to say, "Yeah, you need a roof cert, and you need a plumbing cert," or whatever the case is. So all you're going to do is team up with those two professionals, make sure that they can get paid through escrow, because a lot of people want to get paid up front, and I understand that too. But if you can find that expert that'll get paid through escrow, the transaction will go through as normal. The people will do the work. The appraiser will go out there and re-inspect, check off on it, and then you fund the loan and everyone gets paid. Which is probably what they're going to do through the transaction anyway. They're probably going to do those things anyway.
Good explanation.
Thank you. Ryan, Compton or South Central dangerous?
Yeah, sometimes. Yeah, every Beverly Hills is dangerous. There's a lot of
What part of Beverly Hills are you hanging out in?
Oh, there's some bad shit that happens, man.
I beg to differ.
Okay. Cool.
Ryan, I did a 3% conventional in 2019. Refi is 2.88 in 2021. I think I dig my info in the garden. I think they'll dig my info
They dig my grave in the garden. Oh, he's not moving. That's it. Oh, I get it. Ryan M says he's not moving. Got it.
Okay, cool.
All right, good for you, man.
Tezo
2.88 is
dangerous.
amazing.
Is it dangerous,
Yeah,
Tezo?
Is it dangerous? Are you in LA? Cool.
Allison, how much should I keep in savings after closing a house?
So there's a 3-month rule. Depends on what you're looking for. There's to get you qualified, and then there's suggestions. People say that you should have 6 months of savings, which is cute. Yeah.
I like that, Team Sanchez.
Yeah.
Dangerous is relative.
Dangerous is
You're right,
relative.
man.
You're right. Yeah, I have relatives that
He
are
thinks
very
Beverly
dangerous.
Hills is dangerous.
Stop with the shirt heat, man. Shit. Dude.
Oh man, they have no idea
Jay
what they're doing
Biss.
to you.
Oh yeah.
They have no idea what they're doing to you. But I'd be very motivated if I lived in Compton. Yeah, Team
Yeah,
Sanchez.
you get. And the truth is, if you live in a bad situation and you have the ability to pull yourself out by working harder, working longer, changing professions, this is a very motivating reason. If you're trying to protect your family, that's a big deal. That's a good reason to stand up, pull your shoes up, and get to work.
Christina Del Ria, what banks loan to I-10 for home loan?
We do.
You know Christina?
No, Christina Del Ria. We broker I-10s, right? We broker I-10s? Yeah, we do. What New American Funding does, but we do something called brokering the loan, which means we're authorized to do the loan through another bank, and we broker it out. We can do I-10 loans. We can do them as low as 15%, but that's a one-off. It's a weird situation, and it's usually 20% for I-10 loans.
Maybe Lee should do the talking because Chris is making stuff up.
Oh, dude, you're making shit up. What are you making up, man?
Oh.
What are you making up? User 4601. What's he making up? I want to know.
Angel, do you have a certain credit score to get a down payment assistance program?
Angel, yes. It's usually 660, sometimes 640, but we have a proprietary product that was going to 620, but down to 600 now. What? So the easy answer is 600 at New American Funding, but most places like Calhafa, Sapphire, Shinoa, Platinum, those are all going to be 660. 680 sometimes, right? 680 sometimes.
Yeah, some of them. Martin Hernandez, escrow is the best way. I do this for my clients. Realtor Arizona. Probably talking about the repairs. So yeah.
Oh yeah, Martin, great idea. And
strategy.
Martin, we appreciate you in Arizona, man. What part of Arizona? We like to hear about Arizona. We've got some realtors that we work with in Arizona, and we need more.
Emily, you got to keep that stuff to yourself. Those are secrets.
Oh, what happened?
She said, Rocket Mortgage, going on 4 years. I know it's not everyone's favorite company, but I'm happy.
Oh,
I'm happy
Emily,
for you,
Emily.
Happy
I
for
actually
you.
am a fan of Rocket. I tell people, they're like, hey, how do I get the best possible mortgage in the world? I'm like, you probably could go to Rocket. I'd have a tough time competing with them if you have a perfect FICO, a perfect 2-year history, you don't have any hiccups on anything, and you want to go forward for purchase. Not bad. Rocket's not bad. I would like to compete with them, but I will tell you, I got to fight to beat Rocket. But here's the problem. If you actually run into a real problem, hey, I'm not divorced. Hey, I'm still married. Hey, I got child support. Hey, I had a BK. It's really hard to get a hold of a loan officer in Rocket, and most of them aren't. I say this with respect, Emily, but most of them aren't educated. They don't know what they're going, because Rocket's a very easy place. I interviewed one time, a long time ago, for a company, and they said, hey, Lee, we're going to pay you, you're going to close 60 loans a month. I said, 60 by myself? And they said, yeah, 60. And I said, how do I do that? And they said, well, the law says you have to talk to them and sign the paper. That's it. So you do the intake, and then we hand it off to a processor, and the system takes care of the rest. And they're like, you're going to talk to people for 10 hours a day, and you'll close 60 loans. I'm like, how do I know what's going on in the process? You don't have to worry about it. The processors and underwriters and everybody else will take care of it. And I was like, well, wait a minute. How am I helping the client? They're like, you're funding loans. What happens with the client? So what? A lot of them aren't going to fund, but so what? And I said, I don't like that business model. It's a business model that exists. And I said, I don't like that business model. I like the business model where I learn the customer, I learn the problems, I solve the problems, I build a good customer base, and they come back to me year after year, and then they send me their cousins and brothers and sisters and aunts and uncles. I like that business model. And by the way, the guys who make $1 million a year in this industry, they have that business model. So we went to that business model. That's what we do.
Much respect, Emily, for putting out where you're from, because he won't even tell anyone he's a Cowboy fan. So there you go.
All right.
Then, look at everybody laughing.
I know.
What is your advice on using HELOC line of credit on an investment property?
What's your advice?
Spend it wisely. I don't understand the question though.
Yeah.
So one, I don't know if you can do a HELOC on an investment. So I've heard that you can't. I've tried. I don't know if you can. So if you find something, spend it wisely. What other advice do you want?
What credit and income do you need for a manufactured home? So the credit and income is going to be roughly the same, and I say that with a little bit of qualification because your interest rates are going to be a little worse, which does change the income a little bit. But it's going to be on a manufactured, it's going to be FHA 4555, and on a conventional 35, 45, sometimes up to 50, but the manufactured has to meet the requirement. The requirement is post 1976, 76, right?
76, June 76.
June of 76, post, has to be older than June of 76, affixed to the ground through an engineering cert and a 433 permanent foundation, and then approved. After it's all approved and we get the thumbs up, then Fannie and Freddie and FHA and VA will finance it.
Tezo, do you guys work with the TSAHC down payment and offer closing costs? So here's the answer. We don't work with most of the tiny programs because there's so many of them. Cities have them, counties have them. There's thousands of them. What we do work with is the major programs in almost every single state.
And
which do the same thing, that have easier qualifications, and we don't have to get recertified. With those programs, lenders have to get recertified. So there's probably like one person that you have to hunt down to try to do that program, and chances are they may not be the best loan officer if they're diving into these small programs.
And I will say this, we do a series on our TikTok about the different states and the down payment assistance programs. And New American Funding is approved in all 50 states. So if you go to the .gov website, not the .org, not the .net, not the .com, but the .gov website, they're going to say approved lenders. Go down to approved lender. Most of the time you're going to see New American Funding because they go the extra step in order to make sure they're approved for the statewide. Now there are like county blocks, county, city, stuff like that. Chris is right. We don't go the depth in that. But for the statewide stuff, yeah.
Yeah, in all states too. Mm-hmm. Best way to finance an ADU without refinancing? Any loans?
There's an ADU loan, but it is a loan. And I don't like it. It's a CalHAFA loan. It's in California. It's a CalHAFA loan. And here's why I don't like it. I'm actually building an ADU. And they say, I'll give you $40,000. And I was like, hey, I could use $40,000. Who couldn't use $40,000? I'm in the business. I could probably make this thing happen better than anybody. So I went in and I dug into the guidelines. And they said, hey, yeah, we will give you $40,000. Here's a couple of catches. One, you have to borrow a minimum of $200,000. I was like, I could probably deal with that. That's fine. If I don't use it all, I just pay some of it back. No worries. Oh yeah, here's the other catch. You must use our project manager, and you must use these certain contractors. And I'm like, how much is that project manager going to cost me? Holy smokes! I can't say shit. Yeah, I can. Whatever. I said, holy smokes! That project manager gets that much? Oh, you want me to use that GC? That's not a cheap general contractor. You want me to use that guy? That's crazy. Oh, you want me to go through this extra layer of hoops? I said, it's not worth your 40 grand.
Are you
it's
working with the mafia again?
God, yes, yeah.
Man.
It's not worth the 40. So I literally, I'm building an ADU, and I looked at that $40,000, and we are approved to do it. But I said, no way in hell am I doing that. I'd rather do it a different way. So I did. I'm doing it a different way.
So without refinancing, you can also do HELOC. You can also do a second loan.
Yes, you can.
Keep that first the same.
Yep.
So there's three options.
And if you're doing an ADU and you plan on renting it, if you plan on renting it and it's going to debt service, it's not even out of question to do a credit card. If you got $80,000 credit card, just put $80,000 on the credit card, and then you're going to have a gigantic monthly payment. But if you rent it, then there it is.
All right. Darla Dempsey, I'm trying to get a loan, but score is 639. See the problem?
I don't
see a problem.
I don't see a problem, Darla.
I see a person that's about to get a house.
Darla, I see you. I see the home in your future. There it is. Boom.
What color?
Beige.
What color's the grass?
Green.
Dang.
Dude.
Steven, I'm new here. Do you guys lend in all states? How do you guys deal with student loans?
Steven, yes. All 50 states. Up until about 2 weeks ago, we couldn't say that. We weren't blue skied in New York. We are now able to do New York, all 50 states. How do we deal with student loans? It's not we. This is where I tell you the loan officers are walking around going, "Hey, I'm this and that." I'm no. There's
Here's how
guidelines. Yeah,
I do
yeah. This
city
is how
loans.
you don't understand. I do things special. No, get out of here. They're guidelines, and it's just
Tetris
real simple.
instruments.
Yeah, it's guidelines. It's guidelines. So VA has a special way to deal with student loans. I think it's 0.5%, 50 basis points, right? 50 basis
FHA
points.
and Freddie.
FHA and Freddie, 50 basis points. Fannie Mae is 100 basis points, which is 1% of the overall aggregate. So if you have a $20,000 in loans, I take 1%, $200, and I count $200 against you as a revolving liability, unless you have a fully amortized payment, in which case I can use the fully amortized payment if it's less. So there's reasons that we do that, but they're guidelines. There's no the way we deal with it. Good question, very good question. But you should know that there's a lot of loan officers out there like, hey, you don't understand. If your bank is telling you you need a minimum FICO for VA, well, your bank just doesn't know. I'm like, it's just guidelines, man. You're acting like you know something genius when the basics. It's like a doctor going, hey, did you know aspirin thins your blood? To another doctor? Come on, get out of here.
Yeah, man.
Sorry.
I'm a
Sorry.
doctor.
I get a little. When I see these guys, I'm like, oh my God, I can't believe you're saying that shit. I mean, if you get something that's powerful, like can a non-veteran be on a VA loan? Yeah, that's pretty powerful. That's something that's, yeah, can they? Loan off, no, you can't do that by the guidelines. Yes, they can. It's the guidelines. They can. But here's the catch. They need to put 25% of their half of the house down, and then they can do it. That's the guideline. It's the guideline. Is it favorable? No. Is it probably something people are going to do? Most of the time, no, but I have done a couple in my career. So when you see these things on TikTok and they're like, hey, revelation, you don't understand. You know, it's, yeah.
All right.
Sorry, pet peeve. Got a pet peeve going on.
Christina De La Ria. What about I-10 husband, social wife? 20% down?
Or interest west.
Okay, so let me clean this up.
Okay, cool.
Okay, so we can do an I-10 as low as 15% down. So there's that. Interest rate is about 8.5, 9.5 in that range.
Yeah, they're high.
You can use your husband. We can't just use your social. So everyone has to go on the loan. Okay, and it will be I-10, minimum 15% down.
Mm-hmm.
Emily, Ryan, the last name. There's 30,000 employees. LOL. Oh, you got a little side combo going
Oh,
on.
we got a little side combo going
Totally
on.
understand
cool.
where you're coming from, Emily said.
Oh, cool.
Martin Hernandez said, Southern Arizona, Tucson, another city, Green
Green
Valley,
Valley.
Mato, Pico Rico, Nogales.
Nogales.
What is
Hey,
that?
Martin, that's where I asked him where in Arizona, what kind of, he's a realtor in Arizona.
okay.
And you know what? Here's the thing. We'd like to know who you are because we get people from a social media. We got a pretty big presence on social media and we get people all the time. And if we have somebody that we know, like, and trust that is good at their job, if I got somebody in Green Valley, I mean, I just go down my chart and I don't have anybody in Green Valley. So if I don't have anybody, I go to my system. The system is I have a realtor who's one of these top producers, and she's in a group all the time, top producers. And I say, hey, can you get me a realtor in Green Valley? She says, sure, and she'll give me 2 realtors. And then I'll call the realtor and I'll say, hey, Bill, this is Lee. I'm a loan officer of New American Funding. I got a client who wants to buy in Green Valley. And I want to talk to you a little bit about, can you take on a client? Will you give him good service? Blah, 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 blah. By the way, my fiduciary responsibility is to my client. If I feel, Bill, that you're not doing a good job, I'm going to replace you. I'm going to recommend my client use somebody else. Bill says, yeah, cool, no worries, man. I'll work really hard for you. And that makes sure that my client gets top customer service. But if I already have somebody like Martin that I have a good relationship with, and I'm like, hey, Martin, got another one, man. Yeah, get him into a house. Let's work together. Let's make this thing happen. So we're always looking for realtors all across the country, trying to help you guys out, trying to get people into a house in 2024.
Kaylee, can I get an FHA loan in Texas without taking on my spouse's debt, legally married but separated?
You take that.
No,
No?
not in Texas.
Why?
It's community property state.
What?
If I got married, I wouldn't get married in Texas.
What?
Or California.
What?
And a lot of other states.
What?
Florida's a good one, though.
You better watch yourself.
Florida's a good one.
You're going to be in trouble, dude. You're going to be in trouble. You can't say that stuff.
So, if you're going to FHA, we're going to have to pull your spouse's debt. If you're legally married, it's going to get found out. The underwriters are going to see it. You're going to get busted. We're going to have to pull spouse's debt. That being said, why can't we try to go conventional?
Yeah, let's go conventional. Conventional, we don't have to even bring him up. We can forget, the loan business can forget him just like you did. Boom. We don't know him anymore. It's like Yeah, I used to know this guy. I don't know him anymore. Not on my loan. I know that.
So Kaylee and the rest of you, if you're interested in getting a home loan, time for a commercial.
If you need a badass loan, call a badass loan officer. You can reach a badass loan officer at New American Funding. Your badass loan officers are Chris and Lee. This is their phone numbers. You just text it and you can call them or text them and they will help you with your loan. This is going to disappear in 5, 4, 3, 2, 1, bye. Cool. Special effects.
I am V. Moore in Hotlanta, Georgia.
Hotlanta. Why do they call it Hotlanta?
Oh, it's
dude.
mucky,
Is it
mucky.
Hotlanta? That's
Summertime?
not the reason I heard.
Oh, my God.
That is not the reason I heard they call it
Magic
Hotlanta.
City. That's why.
Okay. That's not the reason
Magic
I heard
City.
they call. So I heard that it was there was when Atlanta was just growing. It was when the Olympics started. When it got hosted there. There was a lot of affluent women that moved to Atlanta, and the women outnumbered the men. So in the rap songs, they started calling it Hotlanta. Is that true? I don't know.
Or is it
I
'cause
just
of
heard
Magic
it.
City?
Could be Magic City.
Jesus loved Texas.
Yeah, Texas. Love Texas.
Gabby, can you purchase a home with no taxes or W-2, just stubs? VOE only. Yes, we could do a VOE only. Is that going to be a
Wait,
traditional?
what? We can do a VOE only?
Yeah, it's not traditional.
Okay,
it's
cool.
going to be like
Oh, it's all
FHA,
QM?
VA.
It's all QM?
It's all QM. Yeah.
Okay, cool.
But the answer is yes, Gabby. Kaylee, will you guys do a 580 for USDA? Yes. Gabby, can you purchase a home with no taxes? Oh, we already did that one.
Yep.
Not normally, said Emily to Gabby.
Emily.
She's right. It's not
Emily,
normal. but
not
we can.
normal, but we can.
Tasha, can I purchase a home with my fiance now that we are not married?
Yeah.
Well, we are not married.
Well,
Wow.
while we are not married, you're just two people.
Heck
Two
yes.
people, occupant, co-borrowers,
yes.
cakewalk. We just pull both your credit. We do both of your income, calculate your assets. You both go on the loan. When you get married, still own the house together.
Okay, yeah. Oh my God, I need information now. When you
Tasha!
text us.
Tasha.
Or go to the link up top. Click on apply now.
Yep.
Emily, anyone on a loan? I have people that are just dating. Okay.
Okay.
Tasha, my fiance is in the underwriting process now. Can I go with you guys? Yes, absolutely. Underwriting doesn't mean that you are committed to the loan. Underwriting just means that they're going through the loan.
Mm-hmm.
So up until you sign your final loan docs with the notary public, and in some cases 3 days later, there's no commitment.
And we compete against other loan officers all the time. I'm going to tell you what we tell them. Here's what we say. You got another loan officer, you feel like you're getting jaded. If you're getting a good deal, good for you. A lot of times people send us this and we tell them you're getting a good deal. Like 30% of the time, we're like, that's a good deal. I don't want to touch it. Good for you. You're doing great. Everything's good. But here's what I'll tell you. You're going to tell your loan officer, I need a locked LE, keyword, locked. Locked LE. Here's why. Because loan officers like to bullshit and they'll give you a floating LE with a floating rate. That floating rate doesn't mean shit because they haven't calculated the cost to buy that rate in yet. But once they've locked it, it's a commitment to loan. And that locked LE, and when they go to lock the LE, you will absolutely know how many points you're paying for that rate. But prior to that, you won't know because the loan officer knows how to bullshit. By the way, if you tell your loan officer, I need a locked LE, they know why. They know why. And sometimes we'll get a locked LE and I'll go like, hey, look at this. Let's pull it up. Can we beat? We'll compete against 4 or 5 different banks. We'll go, you're pretty good. You're in a good spot. For you to move to us would probably be not good for you. So just stay where you're at. Everything is good. If things get fishy, call us. But there's an occasion. There's an occasion where somebody says, hey, this doesn't feel right. Usually with a builder. This doesn't feel right, Lee. This just doesn't feel right. I don't like it. And I say, okay, cool. What's going on? Ask for a locked LE. They're not giving me a locked LE. They're only giving me a floating LE. That's because they're bullshitting you. Here's what's going on. And I break apart their LE and I say, here's what you're paying for. Here's what you're paying for. This is bullshit. This is going to change. This is what's going to happen. How do you feel now? And then this most recent scenario, she says, I don't feel good. I don't want this anymore. I don't want the loan, and I don't even want the house. And I said, you don't want a house? That's a different thing. She goes, Lee, I feel like I got kind of railroaded into this thing. And I'm like, okay, well, if you don't even want the house, first question is, what's your EMD? So EMD is earnest money deposit. She says $1,000. Now there's a higher end house, so I said $1,000. Are you comfortable with walking away from $1,000, losing it just entirely so you don't get in this deal? She says, yeah, I'd rather not, but I would walk away just so I can not be in this deal. And I say, cool, and here's what we're going to do. I'm going to get you pre-qualified again. I'm going to send you to the lender. The lender's going to fight with me. When they fight with me, they're going to say, hey, you have to use our lender or lose the deposit. And she's like, I don't even want the property. I say, you've got the right to pull away from it, but there's lots of reasons why you can legally pull away from it. And part of it is you don't meet the loan requirements. Another part is you just don't want it and your realtor steps in. So we got her qualified. She lost the grand at her timing and then landed up in another house probably 3 days later. Probably 3 days later.
Very fast.
We closed on that last week. She's a happy camper. Got a 5-star review.
Hey,
Yay,
Sabrina
that
Sullivan.
happens. Cool.
What are the best ways to get the lowest monthly payment first-time home buyer?
You take that.
Okay.
That's, well, because
So
it's
it's
interest
math.
rate. Yeah.
It's just
always
math.
interest rate. Yeah.
So whatever your rate is, plus however much you're borrowing, it's just math. The only way to drop that number is to drop that rate, which you could put more money into the transaction. But I wouldn't recommend that right now. Also, you could put more money down on the loan, which if that's okay with you, then that's something you could do to bring that loan amount down to get the payment lower. But those are the only real two ways that you can drop that payment. But know this. So the Fed has announced that there's going to be 3 decreases this year. He just covered it this morning, first thing when we got in. Now, we were anticipating a rate drop by now, but not coming. Probably going to have the rate drops around summertime is what it's looking like. That being said, you get in now. Yeah, the rate's not attractive. You're going to refinance in about a year.
Yeah.
When you refinance in a year, that payment's going to drop. It's going to drop significantly. Also, what's going to happen? So let's say you get an FHA loan. We're only putting 3.5% down. Okay. It's going to come with mortgage insurance, and it's going to come with a high rate based on today's rates. So when we refinance you and the rates come down, we're going to hope that that value pushes high enough so that we can remove mortgage insurance and drop the rate and really bottom out that payment for you. So know this, when you do a loan with us, we're going to have a refinance strategy built in because we know it's coming and you guys are going to need it.
Yeah.
You guys are going to want it.
There's no question about whether you're going to refinance. Just the math is going to show you're going to refinance. So then you have to do it strategically so that you don't do 4, 5, 6 refinances. Because if you just talk to a loan officer with commission breath, they're going to tell you, well, when things are 50 basis points better or 100 basis points better, you should refinance. Every time you refinance, it's going to cost you $2,000 to $5,000, somewhere in that range. $2,000 to $5,000, and it's going to restart the 30-year clock. So you have to take all those factors into account. Refinance once. When you do, buy the rate down as deep as you possibly can, and then don't touch it again.
Until it's paid off. Darla Dempsey, she's in Oklahoma.
Oklahoma is okay.
Can we do Oklahoma?
We can do Oklahoma.
What states can't we do?
Here we go. Ready?
Yes.
That's it.
None.
We could do all 50 states. Dude, we did on freaking stereo, man. See that? If you guys have a high-tech sound system, you just heard that in stereo. If you had it in 5.1 Dolby, you heard it in 5.1 Dolby.
But it's one single mic. The mortgage boss. I appreciate you telling people loan officers aren't making things up. It's guidelines.
Yes, mortgage bows. I like that. Mortgage bows.
We all been there.
It's
We all
hilarious.
been
Yeah,
there.
when you're a brand new loan officer, you're like, you believe anything that the next guy told you, and you're brand new. You don't even know to read the guidelines.
Yep.
But after you dig in and you get hurt, you get hurt a few times and you hurt a few people. I hate to say it, but brand new loan officers hurt people because you didn't understand the guidelines.
Hurt people hurt people.
Hurt people. Well, I'll tell you, like mine, when I was a brand new loan officer, I built a VA loan. It was beautiful. It was amazing. It was awesome. And the one thing I didn't calculate correctly was the residual. And I didn't know this guy had 6 kids because he didn't tell me that. He said, I have 2 kids. So I factored in with 2 kids. But I didn't look at the tax return, and there was 6 kids on there. He said, I have 2, but I'm still raising 4 others. And I'm like, you claim this on your tax returns. Oh my God. Now, can I pin that on the client? Sure I could. But I, as a loan officer, should have known. And I could not do the loan because I calculated the residual improperly. And that guy was in escrow, and I hate to say it, I hurt him. Now, I called a friend who was able to do it in that situation. He still got the house, but I felt so low that I started reading all the guidelines, and I learned what they are. Now, if you're brand new at this business, it's so complicated. It is so complicated. Even loan officers who have been in there for 15 years don't know how it works. So, most of the time, this is just guidelines. It's not, hey, the stupid underwriter did this. No, there's guidelines. They're following rules. The loan officer, he doesn't get to do anything special or magic. They're guidelines, VA guidelines, USDA guidelines, Fannie Mae, Freddie Mac. They're different, and it's Anyway, moving along.
You're welcome, man. Darla, thank you for the share.
We appreciate you.
Adrian, our ADA Transportation. Both wife and I are on the mortgage. I have bad credit. Can we get a HELOC only through her? Maybe. There's a lot of different investors that we go through, so you and I are going to have to talk to figure out your situation. I'll reach out to them. We'll figure it out. So I'm going to say maybe on this one. Probably not, just being honest. Yeah. But let's give it a shot, okay?
Yeah, maybe. That's more than I would have said.
Why do I show a user?
Why do I show as a user? I don't know.
What's your name?
Do you use drugs?
Do you have a name?
Are you a... Oh, I see. Yeah. Dave Geo.
Not just Dave Geo.
I don't know what... Yeah,
Dave
I think
Geo 28.
20... You know what? He was like, I think I'm going to be Dave Geo 26. Nah.
No, he's going to be 1.
27. Nah. I'm going with 28. Dave Geo 28. Yeah. Cool.
Right. User 6213. Do I need 20% down for a conventional loan?
See if that guy's got a name. See if he's got a name.
This person with 20% down? Nope.
Yeah, 20%. Okay, cool. Do I need... I forgot the question
20%
already.
down for a conventional loan?
No. You need 3% down. So it's easy enough, right? 3%.
It's a two-part question.
Yeah, 3% down.
For a first-time home buyer.
Or you need 5% down. Or you need 10% down.
Ooh, what if I want to put 7?
You need 20% down.
What if I want to put 7.5?
So let me clear that up. So in Fannie Mae and Freddie Mac, there's 2 programs called Home Ready and Home Possible, and they will take 3%. You cannot have owned a home for the last 3 years. You have to be a traditional or a perfect first-time home buyer. And if you do, 3% conventional. But the MI is really rough. It usually is not worth it because the MI is so high unless you have an 800 FICO. So in that case, you go 5% down. 5% down. Can you do that? Yes, I can. Both Fannie Mae and Freddie Mac, 5% down. Oh, wait a minute. What? 5% down? Well, why on earth would I need 10% down? If you go second home requires minimum 10% down. Can't do that through FHA, can't do it through VA, can't do it through USDA, but you can do it through Fannie Mae and Freddie Mac, 10% down. But what if I want to do investment property? Then I need 20% down. So my answer stands. You need 3% or 5% or 10% or 20%. Boom.
Yeah, they're not coming to us.
Yeah.
Did
I piss them off? Dude, I piss somebody off? I don't know.
Best way to get lowest monthly payment on a VA loan. Here we go again.
Uh-oh, here we go. VA is one of the best in the system. It is one of the best in the system. But if you're trying to get the lowest monthly payment on a VA loan right now, I don't know if that's the best move. Why? Wait, what do you mean? What? Because interest rates are high right now. I mean, if you're just an average guy, you're probably going to get quoted what? VA 6.8?
High
6.8, yeah. 6.875. If you're an average guy, if you have an 800 FICO, you're putting 40% down, you'll probably be in the low 6s, maybe even 5s. But if you're an average guy, probably 6.875 right now. So there is no low payment with 6.875. But if you're understanding what's going on, you know that the interest rate reductions are going to happen. The chairman of the Federal Reserve said they're going to happen. And we anticipate at a minimum 3 interest rate reductions by the end of 24, and we actually think it's going to gain steam in 25, which means you're going to refinance. If you're going to refinance and you know it, to buy down your loan right now is stupid unless it's a qualifying issue. You need to qualify. But to buy it down right now is stupid. What does buying it down mean? It means I put an extra 10 grand to get from 6.875 all the way down to 5.875. So I put $10,000 to do that. Now with that, there is a monthly savings. That's why you do it. But if you know the market's going down anyway, why on earth would you do this when you're going to do a strategic refinance? And on the VA loan, you have something called a VA IRRRL, interest rate reduction refinance loan, which is a very slim way to refinance. But you don't want to keep doing that. So if you're trying to get the lowest payment, I would say right now, get in the house and know that you're going to refinance in the future. Don't trust me. Go learn the markets, study Jerome Powell, study what's going on with the Federal Reserve, study what all the markets are saying, what the stock market's saying, what the bond markets are saying. Subscribe to some really smart people, listen to them, and I think you're going to come up with the same conclusion that we come up with, which is interest rates are going to be going down at the end of the year in 24, and they're going to actually gain speed in 25 because they got to right the economy. Our economy's not in a good spot right now, but they got to right it. And when they do, you're going to refinance. And when you refinance, that's when you want to try and get the lowest rate. By the way, you don't want to do it just because the loan officer said, hey, you could save $200 a month by doing it right now. No, plan it, because every time you do it, it's going to cost you money. Do a strategic refinance when you think the bottom of the market, when you've hit the bottom. And once you've hit the bottom, buy it down as deep as you possibly can, and then don't refinance again.
In our Angie Styles, North Carolina
Damn,
here. Yes, we do North Carolina.
Yes, we do.
Working on the credit to be able to buy. Angie Styles, what's your credit? Because you might be able to buy right now. A lot of people are thinking they need to fix their credit because it's not an 800. Most people can get in right now. So reach out to us. Let's see if we can help you.
The safety is off. I love that.
You ever done New Jersey before?
Yeah, we have. Yep. Good to
Tasha,
go.
thank you. She said, love the energy.
We're here for you, Tasha.
Do you guys help fix credit? So the answer is yes. So all of you need to pay attention to this. All of you need to listen. If you have credit challenges that you know aren't going to work with us, if you know you're less than a 580, if you're buying a house and you have to go conventional and you know you're less than a 620, if you go to the link up top, whether you're on Instagram or TikTok, click on stand.store, click on credit, and there's someone there that will help you. There's a whole program that we use that we refer to, and you can get your credit on track to get fixed right now so you can buy this year. And know this, we've helped people go from a mid 400 to a mid 600 in 6 months. So if you're in the 400s right now and you started credit repair, there's a great possibility you can buy still in 2024. Before the rates really take a dive and the values really skyrocket. So I recommend that. Yes, we help with credit. Let's go to the link up top.
D-Min JJ, do you recommend a VA loan right now? If you're qualified for a VA loan, yes. It's probably the best loan in the system. There's only one downside to the VA loan, and that's the VA funding fee, because it can get quite expensive. If you're service connected at 10% or greater, we get that waived, but make sure your loan officer knows. Better yet, call me, but make sure your loan officer knows what they're doing, because if they don't, it can cost you money. You won't know it. He won't know it. Nobody will know it. You just pay it.
Dang. Blazing 85. If I'm a cash buyer, second, rehab the property, can I mortgage the home to get my money back out? Blazing or Blazing 85? Yeah, you can. Yeah, you're gonna have some time
if
periods.
he's the second person behind a primary, he has to buy that primary out.
Is that what second means?
I guess that's my guess at second. If I'm a cash buyer, second mortgage.
Why is there a mortgage if he's cash buyer?
Why would it be second?
Why is there? Well, how
There's a
could you
primary-
how
'cause
could you
there's a-
have a mortgage if you're a cash buyer?
He bought from somebody that couldn't afford.
cash?
Yeah, that couldn't afford. And there's still, he bought the remainder of the property. We got to clear that up. But if that's the case, then you probably have to foreclose on the primary and move forward, or buy them out. And when you do the cash out refi, get rid of them. I think that can be done. There's also a chain of equity title, right? That's a 6-month continuity of equity guideline. There's a continuity of equity guideline where if you add yourself to a deed, you can't just immediately refinance. You have to be there for 6 months. That's called the continuity of equity, and that's on Fannie Mae and Freddie Mac. But we'd have to see your situation.
Okay, excellent credit though. He has 780. Good job.
Good for you, man.
Devin Rios, rate for an FHA loan $500,000, 680 credit.
680. If you had perfect credit, New American Funding is saying 5.875 right now, which is amazing. But there's an asterisk behind it. It means it's the perfect scenario. 800 FICO. I'd have to see in order to get your score, I'd have to pull your credit. I'd have to calculate your income, your liabilities, and pull up and see what you got.
Shy Guy, what are the credit and income requirements for USDA loans, and do you work with that type of loan?
So, Shy Guy, yes, we do USDA loan. USDA loan has a specific underwriting system. It's called GUS. It's GUS, GUS. Fannie Mae is desktop underwriter, and Freddie Mac is loan processor. So they're different types of underwriting systems. So when you say, do we work with those? Most of the major banks do. They just have to have access to GUS and then be approved. And then what are the requirements? It is a geographically approved situation. So which means the property, you have to actually put the property into USDA.gov, and the property will give you a thumbs up. I think it's green or red. and it'll say, yes, this can be done, or no, it cannot be. You can't just choose a house and go, hey, I want to use the USDA loan on that. It doesn't work that way. It's geographically driven. We do them. They're a little more difficult, to be honest. They're a little more different. The zero down, which people like, hey, I'm going to use me one of them USDA loans because there's zero down. It's more complicated. And bear in mind, the purpose of this is because they want to put population in rural areas and they make it favorable for you to move there. That's why.
Xavier, is it okay if I deposited money for my 401k for down payment and closing costs?
You take that.
Yeah, of course it is, man. As long as we can paper trail it. So we have to show your account before the money came out, your account after the money came out, and the money going into your new account. So the answer is, yeah, we could use it as long as we can paper trail it. Kamash, if I use the cosigner to qualify, what do I need to refinance and remove the other person? If you use a cosigner. Oh, you want to take it? Want me to take it?
You do your version, I'll do my version.
Okay, so if you want to take the person off, you reach out to us. We refinance just you as long as you qualify.
Yep. That is the easiest version. That's the easiest version. But I will tell you, if you have a very low interest rate, let's say you have a 3% interest rate, it might be in your best interest to not call us, call your bank directly, and say, I would like to assume this loan. Assumptions do happen. They're more complicated. You do have to qualify all by yourself. They're going to put you through full underwriting, but you'll be able to keep that rate. So there's a reason why you would call us. It's the easiest way, and not all banks will do assumptions, but some of them do, and sometimes it's better for you.
So call your bank. They tell you no.
Yep.
Call us.
Yep.
T. Racy, how does money gifted from a family to apply towards FHA cash to close work?
In the hands of a skilled loan officer, seamlessly. In the hands of an unskilled loan officer, it's going to be a train wreck because they're going to take out $10,000 in cash. You're going to drop $10,000 in cash in your bank, and then I'm going to have to tell you for a long time, can't do that. And then it's going to get ugly. But for a skilled loan officer, they're going to say, hey, listen, don't have them give it to you. Have them wired into escrow at the close from their bank that they can prove it's been there for at least 30 days.
Okay, commercial real quick.
All right, cool. If you need a badass loan, call Badass Loan Officer. You can reach Badass Loan Officer Chris and Lee at New American Funding. You can reach Chris and Lee by dialing the numbers on your screen right now. It's going to disappear in 5, 4, 3, 2, 1, bye.
Okay, how does credit work if my girlfriend just started building credit and I have high credit when buying a house?
So I'm assuming person. I'm just talking to a person. Yep, person. So we pull your profile, and we're going to do what's called a tri-merge. We're going to pull TransUnion, Experian, and Equifax, all three of those. We're going to get rid of the high, get rid of the low, keep the middle. Then, if your girlfriend is going on the loan, she's going to be a other borrower. I'm going to pull her credit, TransUnion, Experian, Equifax. Take those three, take the middle. Then, because you're both going on the loan, the lower of the two is going to be the powerful one. So I'm going to take the lower credit score, and that's called your operating FICO for this file. Then we're going to move forward like a regular loan.
Sweet. Frankie, hi, Chris and Lee. I'm a conventional loan right now. Can I get myself into something else? Like an investment property or a second home? Is that what you mean?
Yeah, Frankie, that's leans itself to, hey, I want to turn into an FHA loan, which usually is not the better move because FHA has a mandated 0.55 basis points for the life of the loan unless you put more than 10% down, in which case MI will fall off at 11 years. So can you get yourself into something else? If you're talking about a different loan, maybe, but it's not usually better. And the other one is if you want to get cash out and buy something, yes, we could do that.
There's absolutely an opportunity for you, Frankie. I'm Chris, that's Lee.
Yep, we're Chris and Lee. Are we heading out?
Yep.
Oh, dude, we've been here for a while, huh? Hey, we're trying to get your house in 2024. We've been Chris and Lee. We appreciate you. We're out.
Peace.